Come back to our conversation with the CEO of AMCON, Mustafa Chike-Obi, and the Group Treasurer of First Bank. We're talking bonds, and Mustafa, I know you used to trade bonds before you arrived at AMCON, so I want to get your thoughts on the issues you see with the way our market is presently constructed for bond trading. We've seen a lot of progress over the last 6 years. Liquidity has improved. We've seen a yield curve extend to 20 years. But what do you think is missing in the way we trade bonds in this market now?
Well, there are a number of, these are natural development things, so it's not a criticism of what has happened to date, but
right.
Things develop naturally. I think that there's more of an investment mentality versus a trading mentality, and
right.
Those are two different things. I think
right.
that people have to develop a trading mentality, and most of the places I see, the investment and the traders are the same. And I think that we need to start trading. We need to have, but trading requires a lot of risk management, a lot of analytics, a lot of support, and I think that we'll get there naturally, where people are just buying to make markets and to get out at the end of the day.
So what were you saying? Are you saying that we're buying to hold a little too much?
There's a mixture of trading and investing,
right.
And trading is a distinct activity from investing.
Right.
And I think that when the market gets more developed, you will see that separate. You have distinct traders from people who are investing. So I think that that's something that has to happen. We have to have traders. That's one of the reasons why we want to have market makers who will be purely traders.
Right.
The other thing that is that banks are giving people the option, the corporation the option of borrowing beyond 3 to 5 years. Those are capital market activities. So I think that the corporations, if they realize that the banks will not lend them money beyond 3 years, and the banks insist that if you have a project after longer than 3 to 5 years, you should go to the capital market, you start seeing corporations come to the market more often.
Do you think regulators or authorities need to change the dynamics in any way to support that?
I think it's getting there. I think that banks are now less willing to lend long.
Right.
And I think that banks are, and people have to borrow. For example, mortgage financing in the US.
Right.
Even though banks may facilitate it, it ends up in the capital markets. They're bundled together and sold to long-term investors. Banks have no business providing long-term funds for projects. So anybody who wants to borrow mortgage financing or want to borrow beyond 5 years, infrastructure, should be something that happens in the capital markets. And as the banks start separating themselves from those things, you see more corporations, like you said, the power industries will have to go to the capital markets. They have to go to the bond market. And I think that when that happens, you will see many more corporations coming to the bond market and a further development of products in the bond market.
Ini, do you want to share a few thoughts on that point?
Well, I think I agree with what he said to a large extent, but I think we need to put everything in perspective. As of 2003, 2005, our yield curve was only 6 months, right? So we've extended it over time. Now, yes, we've seen on the asset side that growth has been faster. The liability side is only beginning to kick in with arguably the pension reform that's kicked in, which is only a 5-year-old industry. So that begins to provide the natural appetite, investor appetite to take up these issues. We are seeing natural evolution in terms of where the bond market is. And corporate issuance is only just a matter of time because, yes, he's right. We do have, as banks, significant asset liability mismatches in terms of funding term. And that will only grow as the infrastructural development needs need to be financed in the economy. So really where we're at is at the cusp of the true development of our capital markets in terms of raising longer term financing either from the bond or equity market.
Analysts I've spoken to earlier said that there are capacity issues and that's perhaps something that the DMO needs to address. Some of the primary dealers and market makers are not making markets, and it's simply because they don't have the capacity to do so. They don't have the knowledge, the skills. Do you agree on that point?
Well, I agree. Clearly, in my opinion, I think the DMO needs to take another hard look at its whole primary dealer market making mechanism. Arguably, there are probably too many market makers, primary dealers. Perhaps if we limit the number and focus, and then the DMO can insist that those appointed primary dealer market makers actually play the role they were set up for, or they do take the licenses for, and make markets in the way that is anticipated.
Mustafa, like I mentioned earlier, we've seen huge foreign interest in our bonds. You mentioned that you're also seeing some interest in your bonds. What else do you think we need to do differently, more so that we're engaging an international capital market these days?
Well, I think, again, there are a number of structural things. We, for example, at AMCON, we're buyers of AMCON bonds because
Right.
we made some recoveries and we have some cash, and that's one of the best things for us to do is to buy back our bonds. And we're finding it difficult to buy enough bonds fast enough. So I think...
So you want to invest in your bonds because you have excess cash?
As we recover, we want to buy back some of our bonds.
Right.
But we're finding it difficult to buy them at a fast enough rate.
Right.
And so I think that there are a lot of structural issues in the market that were necessary. You know, when you're growing, you put a lot of shackles and restrictions.
Yeah.
But when the market matures, I think there are a number of things that are structurally make it difficult for people to trade bonds as easily as they can. I don't think that, for example, it's quite so easy for a retail investor to buy bonds as it could be.
Right.
But those are natural things. You want to make sure that you restrict it to people who know what they're doing, and as people get more and more knowledgeable, you expand the universe.
Right.
So I think there are things that can be done, that can be looked at again by the regulators and the primary market makers to make things a lot easier.